another video, and we are going to do another weekly market breakdown. Yesterday we looked at the Nasdaq, US30 and all of those fancy stuff. Today we'll be looking at the currency pairs, and as always look for the best probability as we go into this week. Now if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the content, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you'd like for me to cover in my next video. Now, as I've said yesterday, we do have some high impact news coming through for the US dollar. It's probably going to be the most busiest week for the dollar because we've got a potential alpha basis interest rate hike that's potentially going to take place on Wednesday. Apart from that, we've got the job haltings. We also have the ADP, which is directly correlated with the NFP. We've got the FOMC statement, that we've got the interest rate decision, we've got the NFP, unemployment, as well as the AHE, which is the average hourly earnings as well. We've got the CAD, unemployment and unemployment change, which happens at the same time as the NFP as well. But we are going to focus on the US dollar in general. Now, before we get started with these USD pairs, we are going to look at the dollar index first. Now, if you have been on the channel for quite some time, you probably know that I said that the US dollar is going to hit 104, and that is exactly what the market did. I still remember having an argument with someone, because the market was sitting, I think I was sitting at somewhere this level. It's a lot easier to see on lower time frames, and I said we can expect this market to continue higher. Last week Sunday I also said the market's going to continue higher, and people looked at me like I kill baby pandas for a living. And guess what? That is exactly what had happened. And if you go look at the breakdowns I did last week Sunday, you'll see that every one of them was 100% correct for both the Nasdaq 100, for both the stocks as well as the FX space there as well. Now, what we are going to do is we're just going to start with the dollar index, and then from there we're going to take a look at the USDCHF, the Usdcad, Gbpusd, Usdjpy, Eurusd and Audusd. Now if we start on the monthly time frame, what do we see? Now I guess it's clear as daylight that we can see the market is currently testing strong level of resistance. Now a lot of people is going to call this a triple top because you got one top, two top, three tops. Now what happens if the market creates another top? Would that be a quadruple top? So we don't use that kind of jargon over here. We just call this an equal high or level of resistance, and that is exactly what the market had tested. Now there is the one thing I can tell you is that the dollar is potentially going to hit this level first and then go for that level as time goes on for this year, because based on the fundamental data that I've been able to gather over the period of time, this is exactly what we can expect. So this is going to be the first stop. We'll potentially get a pullback here somewhere. Then we can expect, probably somewhere there, get another pullback, and then we can expect this to continue. And we can potentially see the dollar go and hit those levels there once again as well. But if you drop down on the weekly time frame, what do we see? Now the price action is quite the same across the board. I can see how based off last week the market had tested and rejected this level as well. But not only did the market test and reject this level once, it tested and rejected it here once, and then the market kind of came close to it and then pulled, started this downward momentum. Now a lot of people probably think, a lot of retail traders think that this is going to take place. Unfortunately, times are different now versus what they were back then. Now if you're a retail trader, this is the typical what you would do. You would sell here because based on previous price action you expect the market to continue lower, right? So that's kind of what you expect, and this is how retail traders trade. Unfortunately, the fundamental data that we have this time around compared to what it was back then, they are not the same. Now if you drop down on the daily time frame, we have this massive impulse. After an impulse you expect a correction before that continuation to the upside, and the best way to measure that correction is by taking your Fibonacci from the low to the high. Now there is a high probability or a high possibility that the US dollar is going to decrease in value at the start of the week first, and the reason for that is because what investors tend to do is they tend to drive the price lower so they can buy it at a lower price. Also, it's called profit taking in the markets. Now what investors normally do is they start taking profit at a high price because they expect a continuation to the upside after Powell announced the interest rate hikes. They expect the dollar to continue higher, but they would potentially take their profit over here, drive the price a little bit down and then start buying the market up once again. Now, as a rule of thumb, the market always pulls back to the 0.382, so we can potentially expect the market between Monday and Tuesday and potentially creeping through Wednesday to pull back to this level before that continuation to the upside. And if we look left, we could potentially, there's no structure sitting on that left over there, so this is the level that I will be watching for the market to come and test and reject first, because the 0.382 would be that level, and I expect this 2 to 3 candles to print between Monday, Tuesday, and going into Wednesday, and then Wednesday it's time to take off once again. Now back right over to the Usdcf, starting on the monthly time frame. What do we see? This market is currently testing a strong level of resistance here as well. This level over here, excuse me, acted as a level of support. Support got broken, it became resistance. The market printed this overextended W for me, so we expect that pullback before the continuation. The resistance got created, got broken, it's now acting as a level of support. Now we would be crazy to think that this market is just going to pull back to this level and continue higher, because this is the monthly time frame. So the market had also broken, and I don't want to say broken, but this level over here also acted as a strong level of resistance, and the market broke and closed above that. You can see based off previous price action, the market failed to break and close above that level, because we had those weak rejections in the past. This time we have a clear close above this level, and according to the date, it is the 1st of May, so that means we had a clear break and close above that structure, giving us a further confirmation that this continuation to the upside is expected, not only because we expect the dollar to increase in value, but because that is exactly what we're expecting. So if we go down on the weekly time frame, what do we see? Now, from a weekly perspective, I think it's quite clear that, again, the market is currently testing strong resistance. So we do expect that slight pullback between Wednesday, Monday, and Tuesday before that continuation to the upside. From a daily perspective, what do we have? So you can see we've got the similar price action that we have on the dollar index. We have this massive impulse, so we expect a correction. I just want to, so if we do take our Fibonacci from the low to the high of this massive impulse, and we do something like this over here, there we go. Now if you look at this level over here, you can see this level is currently lining up perfectly with this structure that we have in the market over here. And I know it's very far back, but that is the structure that we can expect the market to come and test before that continuation to the upside there as well. And also a 0.32 pullback, which we are expecting from a dollar index perspective. Also going into next week, we can definitely expect this market to pull back slightly before the continuation to the upside there as well. Boom, let's do that. Okay, next up we do have the Usdcad. Now the Canadian dollar has been fighting with the US dollar for quite some time, and the reason why I say that is we've been speaking about this market multiple times. Now this market printed this level of support over here, support twice, got broken, tested as resistance multiple times. The market was stuck within this consolidation for quite some time here as well. Now if you look here, this market entered this consolidation in October and it failed to break out. You know why? Because of the battle between the Usdcad, the USD and the CAD. They both are very good and strong currencies, and when both currencies always produce high numbers in terms of their GDPs, unemployment rate, NFPs, and interest rates, you tend to see a market go into a consolidation. But if you get something as useless as the Euro USD, you'll see markets like that tend to fall because of the weak economy that they have. But when you got a country, well, if you got two countries that's doing well in terms of the economy, you always expect a consolidation until the one gives in, and then you see that breakout kind of take place. Now from a weekly perspective, what do we have? Now here on the weekly time frame, the consolidation becomes even more clear. Now you can see that the market had been stuck within this area. Now I'm not saying that because a consolidation is normally traded, you know, within this, and this is what the retail traders enjoy doing. So I'm not saying that we have to go in here and actually trade this consolidation phase. It's not what I'm saying, but we could potentially make use of this opportunity in here. Now if you drop down on the daily time frame, we can see that the market is currently testing this strong level of resistance. Now the market had also printed this massive impulse. So after an impulse you expect a correction, and we got the correction with the two candles. And if you take your Fibonacci from the low to the high of the impulse, that impulse over there. You can see the market had tested but not come back to test, or just basically literally just tested the 0.382, tested and rejected. So there's a possibility for the Usdcad to potentially continue higher. However, I do see this market first pull back and then continue higher if it needs to, but we could potentially see this market stretch itself slightly, pull back, then could potentially continue higher there as well. Now if you're wondering why I'm saying that the excuse me, why am I saying the dollar is going to go up over here, it's because it's because this market is stuck within a consolidation, and you can see this the high of this consolidation sits over there. So it's only normal that you expect this market to continue this consolidation phase, and then from there, you know, you could potentially see that dump again and then that pump again, and until we get a clear break above this area, that's when we can start looking for buying or selling opportunities there as well. Next useless currency in line is the GBP USD. Now this market had continued its fall to the downside, and it's most likely going to test these lows that it had printed in the market. This was back in March 2020. Now if you start on the monthly time frame, what do we see? Now here on the monthly time frame, we can see this was the most recent structure that the market had broken and closed below, which is a monthly support. The market also broke below the strong level of support, never came back to test it, and it's likely that the market is going to come and test that level in the near future. Now from a weekly perspective, we had this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low of the impulse. Now we do have a 0.382 pullback that's lining up perfectly with this previous level of support that got broken, that is now turned as resistance, but there's also a high possibility for this market to continue lower first before we can expect that continuation to the upside. If you drop down on the daily time frame, what do we see? Now from a daily perspective, the market had already started this impulse. Now if you take your Fibonacci once again there, okay, let me just take a breather here. So we've got the 0.382 pullback. Now because we expect the dollar to decrease slightly in value over the next couple of days, we can expect this market to continue slightly higher before starting that continuation to the downside once again. This is going to be our first point of reference. Alternatively, if we see nothing, then we're just going to keep monitoring the price action from a lower time frame perspective, and then start looking for a good opportunity in the market as well. But this pullback is expected first before that continuation to the downside. Next up, we've got Usdjpy, which is also one of the most interesting pairs. Now this market, like I said, has got the ability, well, not just got the ability, but this market's going to hit 135. There's no question about that. The only question is when and where. Drop down on the weekly time frame, same price action that we have from a dollar index perspective. So we have these massive green candles. It's quite difficult to read the price action or the market structure on this, because if you look here, you'll see that this was the structure that the market had created. Take that also there, broken above that. It would be stupid of us to expect this market to pull back here and then continue higher, because that would be a massive pullback that the market needs to do first. From a daily perspective, what do we see? Now here on the daily time frame, we can see the market printed the strong level of resistance. Now resistance got broken and is being tested as support, where an impulse after an impulse, you expect a correction. Best way to measure that correction is taking your Fibonacci from the low to the high. We can see we had a 0.382 pullback. Now this move here is very highly expected. Now if you're thinking, but why do you say that the dollar is going to go up against the yen? Not because the dollar is going to get weaker, but that's because the yen is going to, well, the yen is getting weak. And sometimes you have to understand one thing: if the dollar is depreciating in value slower than the yen, if the yen's rapidly decreasing in value at this point, you can expect the Usdjpy to go up, not because the USD is getting weaker or stronger, but because the Japanese yen is getting weaker. That's why sometimes you see currencies that are performing bad against a different currency. So if you look at GBP USD, it's been falling, but if you look at GBP you'll see it's been climbing, not because the GBP is strong, but because the Japanese yen is weak. Next up, we got the useless number 2 over here, monthly time frame, same type of price action. The market is currently testing a very strong monthly support, slight pullback expected before that continuation. Weekly time frame kind of confirms that pullback over here based on this last week's close that the market had given us here. So we can expect the market to pull back to this level over here before that continuation to the downside. Clear impulse, take that Fibonacci from the high to the low, you can see we do have this confluence of the 0.382 that we can expect the market to pull back to before that continuation, because we expect the dollar index to just decrease in value there as well. Now from a daily perspective, you know, we have that level over there, but I doubt the market's going to pull back. We can expect that pullback first before that continuation. We also have this candle with the long wick. We expect the next candle to go and fill in the wick. So definitely bullish on Euro USD for the start of next week before we see that continuation to the downside there as well. Next up, we do have AUD USD starting on the monthly time frame. Now this is one pair that I've probably enjoyed myself with last week. If you start on the monthly time frame, what do we see over here? Firstly, the market had also printed the strong level of support, broken, became resistance, tested it multiple times, market started to melt to the downside. We also had this W formation. After W formation, expect a pullback to the neckline and then a continuation. The market failed to, the neckline failed to hold. The market then broke below that. This level over here acted as a level of resistance, so it got broken, it became support. Support did not hold. All of that supports now once again turned resistance. We're also testing strong support from this structural here, so we can definitely expect this pullback for that continuation from AUD USD there as well. If you drop down on the weekly time frame, what do we see now? From a weekly perspective, we can see how the market had now printed this overextended information. After an overextended information, you always expect a pullback to the neckline. So this is what an overextended M looks like. You expect a pullback to the left leg before the continuation to the downside. So once again, giving us a further confluence that we can expect the market to pull back to that level before the continuation to the downside there as well. From a daily perspective, what do we see now on the daily time frame? We had this massive impulse. We had that candle with that wick also, but we had this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low over here. Now we have to be very careful with this. Firstly, is this market going to pull back slightly? Yes, it is, but we do have structure that the market had printed over here as well. Now as traders, we have to be reactive and not predictive. Now there is a possibility the market's going to pull back to this level. The only question is, can we expect the market to pull back slightly higher before starting the continuation to the downside, or can we expect the market to pull back into that level and then continue to the downside there as well? One thing we do need to keep in mind is we have the AUD interest rate also coming out on Tuesday, on May the 3rd, which is expected to be increased with a quarter basis point. We've got the cash rate, we've got the rate statement, which is what we just spoke about now, also for the AUD next week as well. So as traders, as I always say, it's best to be reactive and not predictive. And being reactive means that if the market does break above the structure, then you react to the new price action that we have. Being predictive is saying that this is going to happen, but when the market then but if I say that that this is going to happen and the market does not do this, then I will have to react to what the market does next and not predict that this is what's going to happen next. In any case, guys, that is all for this week's market breakdown. I'll also continue to drop these things throughout the week as we move along there as well. I'll say thank you for your time. Thank you for taking out the time out of your day to watch the video, and as always, cheers for years.